Alright guys, I'm back after a while. This is gonna be my first video in a pretty long time, probably like a couple months, couple weeks or something. But today I'm basically just gonna lay it all out. I'm gonna give you my entire strategy from top to bottom, no blank spaces. And really, this strategy has consistently helped me pass evals, get payouts, and really consistently start making money from trading. This strategy is so simple. Your younger sibling could learn it. Your grandma can learn it. It's literally the simplest strategy, I think, in the ICT space. And out of all these creators out here, this is probably the simplest strategy. Anybody can follow it. It's so consistent. You will be able to pass your evals, get payouts, and like the title of this video says, eventually grow to 10K a month and beyond. All right, with that, let's just get into it, hop on the charts, and start laying everything out.
The first thing that we're going to do for this strategy is we're going to go on the 1 hour chart. We're just going to identify what type of trend we're on, right? Uptrend, right? Higher highs, higher lows, or downtrend, lower highs, lower lows. All right. So I'll just use Friday as an example. That was a pretty good trade on Friday. We're in an obvious downtrend, right? So since about the Friday of last week, we've just been, moving down, higher highs, lower lows, and obviously this is Friday. But we're in a downtrend, right? So we can identify that. So then, after we go to the 1 hour chart, we're just going to move to the 15-minute chart here. And I have an indicator that just shows out fair value gaps, but you don't really need it. So now that we're here, we're trading New York session, right? So from 9:30 to 4 p.m. is when New York session is open. But we're looking to take trades anywhere from 9:30 to around 11:30. All right, so that's when we're looking to take our trades. And once again, we're trading NASDAQ and the S&P 500. And they look about the same. There's some small differences that we'll get into later. This is just like the overlay of kind of the entire idea, and then I'll get in and break it apart. And then I'm just going to mark out the fair value gaps on the 15-minute chart. So like we saw one here that was being created right kind of at market open. So we have this 15-minute like pre-market. We had these and everything that were already filled. But the one that I took a trade off on Friday was this one right here. And so once we mark out our 15-minute gaps on the 15-minute time frame, we're going to go to the 1 minute chart. And we're basically just going to wait for price to come back up. So right, we're creating the gap here still, to come back up and tap into it. All right, and it didn't exactly hit this one, but I'm going to show you why I still took the trade. And that is because on the S&P 500, we can mark out the same 15-minute gap here. Get it up. The same 15-minute gap here, right, was tapped into on the 1 minute chart by the S&P 500. But since NASDAQ didn't tap into it because it didn't reach high enough to even go there, that means we had something called an SMT divergence, a smart money technique. So big banks use it in order to basically fill their orders and move the price in the way they want to. So since NASDAQ didn't have enough buying power to reach the fair value gap, that basically means the NASDAQ is weaker than the S&P 500. So there are more sellers than buyers on the NASDAQ. And would it really matter on which index you took your trade on? Not really, but we would have a cleaner trade if we took it on the NASDAQ because it's just more bearish, right? There's more downside potential, right? More downside potential. So you gotta tap in on the 1 minute chart, right there on the S&P 500. We didn't on the NASDAQ, but since it tapped into the S&P 500 and we created an SMT divergence right here between this fair value gap. Sorry, I gotta keep going back and forth here. Right, this one created, basically, in simple terms, the S&P 500 swept liquidity and created a higher high and tapped into the fair value gap, but the NASDAQ created a lower high, right? And so what creates a downtrend is lower highs and lower lows. And so since NASDAQ created this lower high, it was just a bit lower, that basically means downward pressure on the NASDAQ, right? So we got a tap in. Then on the 1 minute chart, what we're going to do is we're going to wait for a break of structure, right? So we're just going to look for a place where price broke structure to the downside. Now, what is breaking structure? What is structure, right? What do we define as structure to then, for then it to be broken, right? So hold on here. Alright, yeah. So structure is basically when price closes, which is like when the candle ends, above or below a higher low, right? So right here, this would be a break of structure, right? On this candle, on this gray candle here, we would have a break of structure to the downside. And basically all that a break of structure is it's just another confirmation that we're beginning a new trend, or that we're going to move in the direction that the break of structure is in, right? The other thing that we can look for along with the break of structure is an inverse fair value gap. Now, we know what a regular fair value gap is. It's a 3 candle pattern with the fair value gap being in the middle candle where the wicks don't overlap. So right here, you can see there's a fair value gap. The wicks don't overlap between this candle, so it's a 3 candle pattern. These 3 candles right here, okay, here's 1, here's 2, and here's 3, okay? Then we can see the wicks don't fully overlap this middle candle, which leaves a bunch of space right here. And in that middle candle, in that blank space, that is where our fair value gap is. And that's what we're looking for on the 15-minute time frame, a rejection off of that. But a confirmation to inverse the fair value gap is when we get a close below, right? So look, we have another fair value gap right here, being in this middle candle, right? Where we have 1, 2, 3, the wicks don't overlap, and we create a fair value gap. But then here, we close below it, right? We close on this candle below this fair value gap, right? So that can be a confirmation we're invalidating buying, we're invalidating bullish fair value gaps, we're invalidating buying power. Okay, so when we close below it, that could be a signal for a continuation to the downside. All right, and in this case, that's what I used here for my entry. So we got to close below this fair value gap along with a break of structure right there of that higher low. Okay, so we got a break of structure, inverse fair value gap. We can enter on the retest, right? So on this candle, the wick pushed us back into this fair value gap. We can put our stop loss above this high, right? So this is protected, our stop loss. And then we can target this low. Boom. Right? So all we're doing is, let me come down here. 1, finding high time frame trend on the 4 hour. Okay. Then marking 15-minute fair value gaps. We're going retest of 15-minute FVGs on the 1-minute chart. On the 1 minute. Alright. Then wait for a break of structure or inverse fair value gap. Right? Enter. Stops. Detected. Above highs. Or FVGs. Take profit above or below highs / lows. Alright, and that's basically that. So screenshot this, do whatever you need to do. That's it. We're finding the high time frame trend. We're marking out 15-minute FVGs. We're waiting for a retest. We're waiting for a confirmation, and then we enter. Right? So as long as you know, like, the basic ICT concept, right? Fair value gap. Basic ICT concept. Break of structure. Basic price action concept. All right? As long as you know that, you will be a profitable trader. Just don't revenge trade. If you just follow the step-by-step plan every day, you will be a profitable trader. It's almost impossible to fail if you just follow these 5 steps. Literally impossible. So, once again, screenshot this. Just do whatever you need to do. Find high time frame trend. Mark out 15-minute fair value gaps. Retest, break of structure, high peak. That's it. Right? We can go back. You can find numerous examples of this working. Right? Thursday. 15-minute chart. Right here, market open, we create numerous 15-minute gaps. Boom. Right here, we created the gaps 1, 2, 3. We tapped into it on this candle. That white candle, we tapped into it. Right, we go to the 1-minute chart. Let's find it. Does weird stuff with the time frame sometimes. Boom, we tap into it. Get a break of structure and an inverse fair value gap right on this candle here. Right, we can see this fair value gap. We got to close below it. We got a break of structure all up in here. Right, we take our short position, stops above the high, target the lows, smash TP, you're making money. All right, impossible to fail. That's basically, it's such a simple strategy, and yeah, that's basically it. If this video is helpful, make sure to subscribe. I'll probably start coming out more consistently, with different videos going into specifics, more trading stuff, and yeah, hope you guys enjoyed, and see you in the next one. See ya.